What up, YouTube? Felipe here, bringing you all another video on the wheel portfolio. This is where I bring you guys an update on the selling covered calls and cash secure puts. So if you haven't followed last week, we actually had a major brutal week last week, but we're recovering. We're still down from all-time highs. Let's check all-time highs here. We reached a 16.4 valuation here on this portfolio. So we're down about $1,000, but this is some of the best times for you to get in the market. Seriously, like whenever you see volatility, whenever you see fear, this is some of the best times where you can capitalize on it and deploy your money. So if you're sitting on the sidelines waiting for a bottom, we might have seen the bottom already. We'll never know. So don't be stupid and wait to time this thing because you can't. Trust me, I've tried. You maybe you're better than me at this. Maybe you'll find the bottom. I got pretty close last April, but it's just a losing strategy because you're going to be waiting on the sideline, trying to deploy your money. It's just a losing game, in my opinion. So if you have money to invest and you're actually trying to build new positions, I think this is some of the best times to do it. Last week, I've lost a good bit of chunk of money selling covered calls, and we're here to talk about why and some of the plan of action for this week. So this week I sold this contract here on Robinhood with the $76 strike. I collected $44 in premium and I'm pretty happy. This is a pretty solid base hit. You don't have to go for home runs whenever you're selling calls or cash secure puts. Your goal here is to build consistent income regardless if price goes up or if price goes down. So having a $44 credit for the week on Robinhood is actually a pretty good for me. In my opinion, with 100 shares valued at $76, that's around a little bit less, about half of a percent on this contract for 1 week. So imagine you keep doing this yearly. You can analyze this number and you're going to see a much bigger number because you're consistent every week selling contracts. I like to sell them at a 0.15, 0.20, which it gives you a little bit of room for the stock to go up, for price to jump around a little bit, and for you to not get assigned. So at this time, $76, we were going to have to see Robinhood go up another 4%, another 5%. And we already had a 1% day, closer to 2% on the morning time. And that's around where I sold my contract. And so we're up $15 already because I sold the contract here in the morning time whenever we see price move a lot. And I was able to somewhat time the top of today's Robinhood price action. So I don't recommend you do. I mean, whenever market opens, you can see patterns, right? Like guys, you see pre-market, we're trading up, and then whenever market open right here at 8:30 for me, I'm in the central time, you see a little bit of a dip, not necessarily super significant, but then you see a reversal and then we're climbing up. So as you can see right here, this is a clear up pattern. And I think I sold my call like around this time right here. So you can see, this is probably we're not going to see like a 7% Robinhood day out of nowhere. This is a pretty ordinary Monday after Easter. So pretty regular stuff. This is just a base hit, but I'm happy. This is what the wheel strategy is made for: consistent income over time. So this is my Robinhood covered call for today. And I'll share with you guys in the Excel here in a second the rest of the covered calls that we sold on the other two positions. So if you're new, this is how I'm tracking the premium that I've earned, and a little bit more information on the expiration, the strike, what I'm selling, if it's a cash secure put or a covered call, the week that we're trading in. So for this week, for example, we've booked a $133 premium earned so far. These could move against us, but I went pretty outside of the money. I was selling them at around 10 to 15 and 20 delta. So, there's a 10 to 20% chance that our contracts move against us. And I'm okay with those odds. As you can see, our strike price for AMD is at 237.5, and AMD is currently trading at 220 after a 2% day. So we're going to have to see another 5 to 7, 8% week for AMD to reach our strike price, which is not necessarily going to happen. Maybe, I don't know. I can't predict the future, but I'm just being safe in my contracts and my strikes. Same thing with Robinhood. We sold a $76 call and Robinhood's trading at 69. So we're going to have to see what is that, like 6% gain for the week for Robinhood in 4 trading days, unless there's something phenomenal that happens, which there's no reason for it to happen right now. Robinhood probably won't go to 76. And I could be totally wrong. And you guys can see this video on April 10th, whenever these contracts expire, and be like, this guy is a joker and he's just talking whatever. In this case, if we're actually closer to the money and I'm getting closer to being assigned on Friday, I would just roll out my contract and up. So I'll buy this contract back and sell a new one. It's called rolling. So I'm bringing my strike price up and my expiration out a couple of more weeks, so I can have more room for the stock to go up and not get assigned. And I can keep doing that essentially forever. It gets to a point where if your contract is super in the money, it doesn't make sense to do it anymore, because the premium you're going to earn is not going to be the same premium that you're going to buy the call that you already have. So you're going to be paying money to roll, which is not good. You're just digging yourself in a deeper hole. But that's just something that you could do. We hope that we don't get there. Getting assigned and rolling are not necessarily our goal here. Whenever we're selling a covered call, we'll take it, but that's not necessarily what we're going after. But for now, this is what we've got. We got $133 from selling a call on Robinhood, AMD, and Amazon. And as you can see, last week, that was actually our worst week yet. We had a negative $1,080 week. That was pretty brutal. It erased a lot of our gains from previous weeks. So we're actually sitting at a negative $42 net gain from this whole options trading journey that I've been documenting for the last 4 weeks now. So it's all right. I mean, we saw a lot of green last week. I don't think we're going to see it again this week. The market just wants an excuse to rally, and Trump was giving it to it. So all these contracts were kind of working against me there. I had to buy at open. I think it was on Thursday. So I wouldn't get assigned on Google or Meta. And go check out the video from last week. There's a little bit more detail on that. But we avoid assignment and we keep our contracts in our shares, which is pretty cool. So we can keep playing the game and we can keep letting our shares and contracts appreciate in price as the underlying goes up over time. So I'm also tracking the cash back that I get from my Robinhood card. Last month, we're able to cash in $58. So I'm adding it here to the tally. And we also have $272 worth of premium that I've been selling on Robinhood stock that I wasn't documenting, but it's a jumble of notes right here, and it adds up to $272. But that's how we get to this number right here. But this is the activity for this week. Only sold on 3 of our positions. Don't want to sell on Meta or Google. Honestly, I'm kind of attached to those positions and I shouldn't be, but I don't want to get assigned. I don't want to get out of them because I'm very bullish on both. And I see price moving either way on them this week. We could see Google at 310. We could see Meta at 620. And honestly, I have no way of predicting it. So I'm just staying out of it for now because there's a lot of stuff going on. So staying pretty passive, selling at 15 to 20 delta, and we're booking in our base hits like I was talking about for $133 this week. So hopefully you guys enjoyed. This actually puts us in the positive a little bit, and I'll update this on Friday once we buy these contracts back to close for $1 or $2. And I'm happy we're back in the green. This happens every so often. This is not something that, is going to happen all the time. The market's unforgiving. Selling options is unforgiving. So this is just a testament to the game that you're playing. It can move against you really fast. So, volatility is not for the faint of heart. So, that's why I make these videos, so you guys can have an understanding of how it is to sell options every week and if it's something that you want to do. So hopefully you guys enjoyed. Don't forget to leave a like and a subscribe. Let me know in the comments what you think, what I should do for the channel and with this challenge. But I appreciate you being here. I want to see you guys win, and I'll see y'all soon.